It's a great pleasure today to be speaking with the founder, CEO of Usawa, Gary Nealon. Gary, welcome to Nairobi.
Yes, thanks for having me.
And it's great to have such a great horizon to be looking out.
Yeah, it's a beautiful view from up here, isn't it?
Gary, some folks might not know who you are, so would you care to just give us a bit of your background, your business background, and then we can discuss what's brought you here?
Sure. I guess I kind of got known in the marketing space, internet marketing space, for a company that I started about 10 years ago. It was an e-commerce company in the home improvement niche that we built up to about $40 million a year in sales. And then I ended up selling that last year. Built a software development company as well along the way, and just kept reinvesting into different companies and scaling different products along the way. And then the latest project that we just started is called Usawa. Yes. Started about a year and a half ago. Our main goal, it was a couple entrepreneurs that came together that had some success, and we really just wanted to create a new company that was actually having an impact, either on a global scale or on a regional scale. And that's kind of where Usawa was born out of. So our goal with it was to give access to savings or interest returning accounts to people that are either unbanked or that don't have access to those kind of financial institutions.
Because that's been the missing link for a lot of people, because we've had tremendous success with these mobile payment systems like M-Pesa, of course. M-Pesa, this was the laboratory for M-Pesa here in Nairobi. But what I've seen is there's a lot of lending going on, but not many opportunities for people to save. So are you trying to plug that gap?
Yeah, I mean, what we found in traveling over the last couple of years is that every time we went to a new country, the biggest issue that we found was that there was no financial education. People didn't understand, how to save money, but then also how to reinvest it or do things with it. So when we were coming up with, looking at like the new technologies that were coming out and sort of our skill sets, we found that like blockchain was a perfect example of a way that we can leverage technology to help people that have never invested before or saved before, and turn it into like an investment tool for for that kind of class of people.
Can I just take a jump back and just go back to, so when you said the home improvements business, that was what people could order stuff for the house online, you would deliver it. Was that what it was?
Yeah, so it was based in the United States.
Yeah.
We shipped all around the United States and Canada, and it was mostly kitchen cabinets or full kitchens. So at the time we were doing somewhere between 600 and 700 kitchens per week.
Wow.
Shipping all around the United States and Canada. So it really taught me warehouse management, inventory management, shipping skills, then obviously the marketing side of it, which was my
But Gary, that's one of the biggest challenges here in Africa is that the warehousing and last mile fulfillment opportunity. Have you looked at that as well?
No, I haven't. It's
Maybe you should. Yeah. I think a lot of people are looking at that. The rumor was Amazon were coming, but I haven't heard about that. And then you said you also set up a software company. What was that software company doing?
Yeah, so because the business that we built was so unique, there were no CRMs or software programs out there that can manage everything that we needed. So my kind of personality or trait was to always say, if we can't find it, let's build it for ourselves. So we started building our own software programs to solve the issues we were having in our company, and then those turned into software that we spun out to other companies or other industries. So it kind of spun another company off of what we were already building in the first place.
Did you also sell that company off, or?
We sold some of the assets with it, and we kept some of them. So we kept a couple different programs and built some new ones in that company as well.
So Gary, tremendous success. I mean, you're being very modest. 40 million, was that the revenue figure? Yeah. You're operating at what has been the cutting edge of the global economy for the last decade. What brought you here? What was? Is it the market opportunity? Is it trying to sort of excite people? What's driving you?
Yeah, so it was my first trip to Africa was probably 2 years ago.
Yes.
Yeah. It was in South Africa, and we were going on a safari. It was my first safari.
Did you enjoy it?
Yes, I did. I loved it. But part of our trips, it's this entrepreneurial group, and it's 1/3 give back, 1/3 fun, and 1/3 business.
What group is this?
It's called Mavericks 1000.
Yeah.
So part of the give back of that trip was we met with a bunch of entrepreneurs
in South Africa.
Yeah, to help them with their businesses. And one of the issues that we found was that the recurring theme was that they didn't have access to small business loans. So they may have had a successful business, it was growing, but they were actually limited because they couldn't buy $2,000 worth of inventory or something something very modest. So that was kind of what sparked the idea, was like, okay, there's a gap in the marketplace that the government's not allowing or not giving them the resources they need to be able to grow. How can we as entrepreneurs help fellow entrepreneurs with that? So
How did you fix that problem in South Africa?
So that was our initial, we haven't totally fixed it there yet, but that was kind of the first iteration of Usawa.
Yes.
And then we brought in blockchain and layered it on top of it, and then looked at our skill sets of, one of the things with, as you may know, with blockchain and crypto is that there's some that are basically based off speculation,
yes.
and we didn't want to build anything like that. So we looked at how can we leverage that technology, but also make it a stable environment where people trust it, provides steady rate of return, but it's actually backed by an asset, so that
Yes.
it doesn't have the ebbs and flows of other cryptocurrencies.
So let's explore that a little bit, because we've seen enormous ebbs and flows, unprecedented. I think The Economist had an image showing that the ebb and flow of the Bitcoin was greater than the tulip mania. So really unprecedented volatility in some of these assets. How do you look at that crypto world today? At one point there are like 1,000 cryptocurrencies, and would you care to opine on the difference? Because I find a lot of people still bundle it all together, think crypto is blockchain and blockchain is crypto and everything is the same. How, as somebody who's played in this space for 10 years, understands it, give us a definition of what we're talking about.
Yeah, so there's a lot of confusion between cryptocurrency and blockchain. Everybody thinks it's the same thing. The easiest way I can explain it is that blockchain is the underlying technology. So think of that as the internet. That's the technology. Cryptocurrency is just a way of trading different types of uses of the technology. So like a Bitcoin or an Ethereum, it doesn't really have a utility use. It's really just people are speculating that's going to have a lot of value. Now there's things being built on the technology that may at some point have a use.
They're speculating on the basis that there'll be demand for the coin
down the road
within the coin's network.
Correct.
And something like Ethereum was very successful because people raised a lot of coin offerings on that platform, right?
Correct.
Yep.
So they used the Ethereum platform to actually build other things. So
Yes.
it became the foundation of other assets. So that was allowing it to grow in value, but it was still a lot on speculation because there was really nothing tangible there.
Yes.
If you wanted to go to the store and try to trade it in, there was nothing that you were going to get for it. It was just perceived value. So when we looked at it, we're like, okay, the technology is great, but let's give people actual hard assets so that
Yes.
there's a tangible value to it. It can be tracked, it can be measured, and it will never actually go down because using real estate, the way that we're leveraging real estate is each of the properties we're buying at a 60% to market value. So there's already a cushion built in there. We're rehabbing them, bringing in the rental income, which was already streaming in, raising the rental income, and then increasing the property value to sell it. So in that formula, even in a down market, our properties are still going to be at market or above value. So in that, it's a true asset. So as long as that trend keeps going, we keep investing in new properties, the coin will just continue to have an uprise.
So you are issuing a coin
Yes.
based on real estate and income flows to do with that real estate.
Correct.
And so tell us a little bit more. What kind of return should people expect? Is this you were saying you didn't want to be speculative? So, how are you navigating this?
Yeah. So I mean, in a traditional market, any market, even like the stock market or anything, you're going to have ebb and flows. So they can't really say, here's your guaranteed return. It could be 10% one year, it could be 2% one year. You could have losses. So with the real estate, we know that we can guarantee a return. So we're actually guaranteeing a 6.5% return on the investment.
In dollars?
In US dollars.
Yes.
On an annual basis.
Okay.
With the interest payments paid on a monthly basis. So.
Oh, monthly?
Yeah. So it's a guaranteed revenue stream that we've proven over the last 2 years. We built the model out, tested it with my own money and some of the other partners in the business.
So you've already guinea pigged it?
Correct.
Yes.
Proven the model, and we've seen over the last 2 years that steadily we've been able to provide that rate of return of 6.5%.
And what's the secret sauce that you've got there?
It's the partnerships that we have in the real estate industry.
Yes.
It's the fact that the properties are already cash flowing, so they already know from day one that they have X number of dollars coming in the door. So it's not speculating based off of the appreciation. It's based off the rental income that's already coming through. So even in the worst case, if they did nothing with the property, it still has that income flowing through it at all times.
So you were also sharing with me some information about African currencies in particular, and the lesson in Africa from when we were children, and our parents and our grandparents always said to us that, the volatility, you've got to risk manage the volatility of the currency. Of course, here in Kenya, the shilling has done rather well, better than nearly every single African currency. But you can look around and we've seen tremendous devaluations. Angola,
yeah.
Nigeria's got a two-tier.
Sudan.
Yes. Oh, that's vicious.
Yeah.
So, what need are you trying to fulfill in Africa with your product?
So it's a combination. Our goal was to beat the global rate of inflation and the rate of return that you can get on the global markets, which we've successfully been able to do. Global inflation hovers anywhere around 2 to 3% per year. So with 6.5%, we're clearly beating that. The other thing, maybe not, it doesn't apply as much in Kenya, but for other countries, we're giving them a way to hedge against that deflation of their currency. Anybody that's familiar with the financial markets can kind of manipulate that by shifting their money to different currencies, but for average person, they don't know how to do that. So if all they know is they make $100, they hold on to that $100. If their currency is deflating at 10% per year, that's only worth $90 next year. So literally just holding your money is actually costing you money. So we're trying to come up with a system that by shifting it over to a US dollar-based asset, we hedge against that decline in the currencies, provided the markets continue the way they're going, and we also offer them a rate of return on top of it. So in certain markets, you may look at it's a 6.5% return, I may be able to get a higher rate on a bond or something like that. But when you factor in the deflation of the currency, we're actually beating that quite significantly.
And then you made an interesting point. You threw out a number, $100. You said somebody's got $100. This week I was reading the Bloomberg, and Blackstone, for example, were withdrawing, saying they couldn't find big enough deals, on the continent. Does your opportunity scale? Does it scale down to the micro? Are you going to be democratizing financial services? Are you going to, a guy down there on the street who's hard-earned $50 or $100, can he come?
Yeah, so that's our goal. That was one of the things that I was kind of shocked by when I started really looking into the financial markets in Africa, is that there's a lot of resources for people that are middle class or wealthy, but when you get down to that lower tier, there's really no way for them to save, because most of them have like minimum investments and things like that. So we really wanted to be able to go to that guy that maybe has $5 and he may only have it for 2 weeks and he needs it for something, but for those 2 weeks, how do we allow him to shift it over and even make a couple pennies off that and then bring it right back? And if he sees that sort of return, even if it's just a penny or two at a time, it's going to spark the idea of, okay, now I could really start saving. So we're actually, can't really disclose some of the details on it, but we're actually working with some of the telecom companies to figure out how we integrate this with their mobile platforms so that it's a seamless shift of just a point and click, like literally I just want to shift over 100 shillings today, but I want it back tomorrow. And be able to do that whenever they have a little bit of funds that they can shift over and earn a little bit of interest on it. I think that becomes so powerful, because if somebody that has never been able to save before, even if it's a couple dollars here and there, that could have a huge impact on their life. And that was, when we saw that, we were like, wow, I don't know how we do this, but we got to figure out how to make this happen.
So okay, I understand the prospect, I understand the opportunity. What are you doing now? How are you executing?
Yeah, so we're working in a couple different prongs. Yeah. We're working with, like I mentioned, some of the telecom companies to try to get it. I think that's going to have the largest scale to the most people. Because you look at some of these companies that have 1 million users, 5 million users. Even if a small portion of them start saving, that's a huge impact. But we also know we can't just look at that. So we're also looking towards some of the banks, some of the pension funds, and showing them.
Because a 6.5% return on dollars in the current environment is hard to beat.
Yeah. And the big thing with them will be the liquidity. Yeah. With most investment portfolios, there's usually a requirement that you have to keep it in for 2 years, 3 years, whatever it is. So we can actually scale that back, because we know by putting on the blockchain and being able to tokenize some of this stuff, we have that liquidity so that people can come in, come out whenever they want to. So it'll give a lot more flexibility to some of the pension funds and the banks.
Just talk to me, this word tokenize and token, it's bandied around a lot of people talking about it. What is it?
So the way I would describe it, I think real estate's a great way to do it. To explain it is that to buy a house, you need a large sum of money. If you could actually get 500 people to put in a little bit of money and buy that same house, it makes it a lot easier for everybody to say that they own a piece of something. So for us, that's what we consider tokenization. So
it's widening ownership.
Yes, it's taking a hard asset, widening ownership, but it's also delineating the risk. So, if you put all your money, it's like putting all your money in, or all your eggs in one basket. Like, it's allowing you to put it in a bunch of different baskets so that if any one thing ever fell through, your risk is diversified.
And are we seeing much in that space at the moment in the Western markets, or?
We are. So actually, amazingly enough, in New York City where I live, they just had 2 major apartment buildings that were just put on the blockchain, were tokenized, and everybody was able to invest in it to fund the building of the building.
Was that the first time?
Yes, that was the first one. I think it was about 4 months ago. Was the first one.
And
in New York City.
It worked, and
it worked seamlessly. Yeah. So we're starting to see that around the world now, where they're actually going to start taking assets. There are some government agencies that are looking at even like road construction projects and everything. Like, how do we finance that without having to take one lump sum from one person? How can we spread that out to our citizens and allow them to invest in it, knowing that they're going to get a return on it?
So this could be a massive revolutionary change in the way our economies work.
Exactly.
And particularly in Africa.
Yeah, so for any kind of country that's looking to, whether it's a construction project, infrastructure, telecom, any of these projects that would normally take a large amount of money, they can now tokenize those and get people to invest in it, and then the citizens and the people in the community feel vested because they have a little portion of that project.
No, that's the main thing, is making people feel they got a stake in the world.
Yeah.
That makes all the difference. Can I now ask you, because you've been at the cutting edge of this space, describe to us what you think the world is going to look like in these areas in the next few years, and what the opportunities are?
I'm hoping it's going to catch on within the next couple of years. I think government agencies and even large corporations see what the technology can do. It's just how do they implement it in a safe way and make sure that all the data is secure and everything. But for me, the way I look at it is I see all those sort of middleman, I don't want to say jobs, but like industries. Like, you look at in the United States, like title searches, mortgage companies, all of that could be tokenized and put on the blockchain and accessible to everybody, so that you don't have to be paying those additional fees into everything. So you look at even supply chain, like when people want to know where their food is coming from now. If you put all that on the blockchain, you can literally see from the farm to the table everybody that's touched that product along the way and where it's come from. It'll eliminate a lot of the issues with like blood transfer. Where does the blood come from? Well, if you put all that in the blockchain and you actually document every step of that process, whether that blood's been tested, whether it's safe, which makes a huge difference when you're looking at like rural communities, especially in the African continent, where they're trying to get medical supplies out to those communities.
Well, you were in Rwanda not too long ago. They're using the drone technology to do that. Gary, I just wanted to if you look back, we had the NASDAQ boom, 1999. We had this cryptocurrency boom that happened. Is this the real deal, this blockchain and what you're talking about?
The way I would put all my money on it in this point is that when you look at who's buying all of the trademarks and patents that are associated with blockchain, and when you look at it, it's all the major banks. They're buying up all the blockchain technology. Why would they be doing that? Because they want to get ahead of the game. At least that's my opinion on it. If they didn't think it was going to be around, they wouldn't be buying up all these patents and trademarks, because they want to own the marketplace. Any smart business, that's what they want to do. They want to figure out how to own the marketplace, and that's the easiest way to do it, is come in, start buying up all these patents while the market's at a depressed rate right now. And I think it's, once the speculation gets over, people get comfortable with the fact that they can actually trade currencies. You're starting to see ATMs go up in cities around the world. Once it's more accessible and people understand it, I think the biggest barrier right now is, how do I buy it, how do I sell it? When you make that streamlined, where it's literally point and click.
There's too much friction now,
yes,
right? Yeah.
That's what it is. It's the friction. So if you can eliminate the friction in that process, so it's literally like they walk into a bank teller and they get their money and they take in a check. Once it becomes to that level, it's going to catch on.
And then a final question, we're sitting here in Nairobi, we're looking out over the city of Nairobi. How is this going to change Africa in your opinion? Is it changing?
Yes. So I think what it allows Africa to do, much like an M-Pesa or anybody's done, is they've looked at the talent and what they have now, and they're leapfrogging ahead of countries like the United States and Europe and everything. And the biggest example is the banking sector. Like to literally be able to use SMS and a mobile phone to do all your banking instead of having to set up branches.
Thousands of people haven't been in a bank.
Right. And think about all the infrastructure that every bank in the United States has built. I mean, the number of branch locations they have and everything to support that, to now be able to streamline that and cut all that out and literally just be able to send money to and from each other without all the additional bank fees. And we're seeing it happen right now in Kenya.
Yes.
As a great test example. So I think it really gives countries without those kind of infrastructures the ability to leapfrog and jump ahead in the technology world by implementing the right laws and making sure it's regulated properly and everything. But that's
a complexity because we've got 54 countries and everyone's trying to regulate. Do you feel that, my final question, that the regulatory environment in Africa, you've been to South Africa, you've been to East Africa, is conducive?
I do. In being Rwanda and especially spending a lot of time here in Kenya, I see that they're open to it. Like they understand that it's coming and they're trying to embrace it. Whereas if you look at any of the major players like United States or Europe or Australia or whatever, they have so many lobbyists and everything trying to compete and make sure that they're part of the game. Whereas Kenya can literally just say, you know what, we can write our own laws, we can have this in place, and we can invite people in. And that's what you're seeing in like the Bahamas.
Yeah, tell me where you're seeing it, because you threw out the name Bahamas, and saying that there's an ICO platform and.
Yeah, so
one of your
Singapore, the Bahamas is another good example where they've really sat down, they embraced it. They brought in some companies that wanted to put together blockchain companies or cryptocurrency companies, and they worked with them on the regulations and figuring out how they police it without killing it. And they've put together this really great infrastructure and set of rules that's now allowing companies to come to their community, set up shop, launch these companies, and all that revenue is coming into their country. So I think that's what the biggest advantage is if like countries like Kenya, Rwanda, South Africa and everything, if they could put together these regulations, they're going to see an influx of businesses and currency and everything coming in because people want to be in those countries where regulation is, I wouldn't say in favor of them, but they understand the playing field. I think that's what the biggest issue is most of these countries is that there's no playing field. So if they do something wrong now, they can be penalized for it later. Whereas if they at least know the guidelines, they can play within those guidelines and understand it and work with the government. So,
thank you very much, Gary, for a wonderful discourse.
Awesome. Thanks for having me.
Thank you.
Yeah.